Hey guys, so throughout this entire year, my main goal was to review every single stock and ETF I had in my portfolio and make sure that they were each doing their part towards my ultimate goal, which is to have a portfolio that can provide me consistent dividend and share price growth. With all that in mind, back in February, I made a video where I put myself in a position where I had to narrow down all 48 positions that I had into 5 to create this ideal or perfect portfolio. And just as an experiment, I took it one step further and I used a portfolio simulator on Investopedia.com, and I actually bought all 5 positions I ended up narrowing down to. Keep in mind, whatever my portfolio balance was on Robinhood at the time, I made sure and use that amount as buying power towards these 5 stocks on Investopedia. So the top 5 positions I ended up buying all symbolize a certain type of position that I wanted for my portfolio. So that consisted of a high dividend paying position, a high growth position, a hybrid, meaning a stock or ETF that does a bit of both, a monthly dividend paying position, and a position with a lot of diversity. So more than likely an exchange traded fund. So with that, here are the original 5 positions that I picked back in February and how they've performed in the market since then. My high dividend position was Altria Group, which ended up growing over 34% between February and up to now. Altria was a pretty simple pick for me, especially with its dividend yield being 7.47%. It does have a fairly low 5-year CAGR, or compound annual growth rate, of 4%, but it has paid its dividend and increased it consistently for the past 54 years. It makes it one of the few dividend kings on the market right now. My high growth position was Nvidia, which has grown over 66% since I bought it back in February. We all know it as the leader in GPUs and AIs, and in the AI investor world we're in right now, that makes it one of the most volatile positions for the past couple of years. With all that, in the past year, it's grown over 170%, almost 180%. In the past 5 years, it's grown over 2,297%. In the past 10 years, it's grown over 26,000%, which I'm pretty sure means if 10 years ago I put $1 into this position, it would be worth $26,000. I hope that's right, because I may sound really stupid. Leave a comment below if I'm wrong. Point is, it's growing a lot. My hybrid position was McDonald's, which grew a measly 0.2%. They've had a rough year. Aside from this year, which they've only had a share price growth of 0.23%, in the past 5 years, they've grown 50%. In the past 10 years, they've grown over 218%. On top of that, they have a dividend yield of 2.39% with 23 years of dividend growth and 7.47% 5-year compound annual growth rate. So that nice combination of consistent dividend growth and consistent share price growth made it my selection for the hybrid. For the monthly dividend position, I picked Realty Income, which grew 4.57% since I bought it back in February. They really pride themselves on consistently paying that monthly dividend. They actually dubbed themselves as the monthly dividend company. And with that, they have a 5.72% dividend yield, and they have 26 years of consistent dividend pay. And last but not least, for my diversity pick, I chose the Vanguard Total Stock Market Index Fund ETF, or VTI, which from the end of February up until now, it grew almost 19%. It's probably the most diverse ETF that I know of. It tracks virtually the entire stock market. And one thing I also like about it on top of that is it has a bit of a heavier hand in the technology sector. Now, in the past year, its share price has grown over 28%. In the past 5 years, almost 86%. In the past 10 years, over 180%. Now, its dividend side, it's not the greatest, but it's there. It has a dividend yield of 1.24% with 3 years of consistent dividend growth, but it has 22 years of dividend payments. So again, for the diversity, I felt like that was a fair pick. Altogether, my simulated portfolio, representing 5 positions that would make up a perfect portfolio, grew 25% from February 27th up until recently. So I made almost $3,000 in growth. So that isn't bad at all for a year. But I wanted to see how this portfolio compared to my actual Robinhood portfolio as far as growth, since I started with a similar balance. And I wanted to start at the same period of time, which again was like February 27th. So from that period of time up until now, my Robinhood portfolio has gained 22.31% in profit, or a little over $2,700. I came into this thinking my portfolio would shut it down. I could explain why these positions were terrible and what I would do instead, but I was beat by 2%, or about $200. Of course, with the Investopedia portfolio, it doesn't have that. Mine does, is somebody actually investing into it consistently, being myself, and positions that lost money. I had a few positions that didn't do so well this year. For example, Target lost 5% share price growth so far this year, a lot of that being how it's performed in its Q3 results. So a lot of that coming from the past couple of weeks, couple of months. UPS has dropped 18% and Nike has dropped 28%. So definitely not great at all. Now, mind you, I did explain earlier in the video what my goal was: consistent dividend growth and consistent share price growth. But the positions that I looked into have shifted between even February and up until now. I'm willing to sacrifice a bit more of the dividend yield for the share price growth, but I still want a consistent dividend. So with all that being said, if I had to do this all over again and pick 5 positions in my portfolio to create the quote unquote perfect portfolio, which there is no such thing, at least in my opinion, and there's probably one better than mine, this is what I would have picked instead to represent those 5 different categories. For the high yield position, I would have picked Vici Properties, which this year has dropped almost 2%, but I still think they're going to do a great job, and they have a high reliability on their cash flow, being a REIT, considering that their tenants are all in the casino and other entertainment industry, the majority of them being along the Vegas Strip. And if you've ever been to Vegas, you'll see how it's busy pretty much all the time. On top of that, they have a 5.5% dividend yield, which is for now fairly high for me, and that's something I definitely appreciate. My high growth selection will probably still be Nvidia, but there are probably a lot of people out there that are not too excited about the high growth, to the point where high growth can result in high expectations. So even though they meet expectations for the past few quarters, their share prices go down. So an alternative option I would pick would be Costco. I like Costco because they're a major superstore chain that not only makes their money off the items that they sell, including groceries and electronics and makeup and clothes and everything else, but they also make their money off memberships and fueling stations. So with all of that, in the past year, their share price has grown 58%. In the past 5 years, their share price has grown 234%, and in 10 years, 596%. Definitely a lot lower than Nvidia, but they may be more of a safer growth stock pick. I don't know. My hybrid position would be Williams-Sonoma, which has grown 94% since that February mark. And Williams-Sonoma is definitely my favorite, probably my favorite position at this point. And of course, that's because of its high share price growth history and its high dividend growth history, despite its TL, but I'll get into that in a second. It's grown over 80% in the past year, and over the past 5 and 10 years, its share price has grown over 400%. Now, as far as the dividend yield goes, it does have a yield of below 2%, but its 5-year compound annual growth rate is over 17%. I've said this before, but I think out of every position I have, it's probably the highest when it comes to its 5-year compound annual growth rate. So that's something I really appreciate, as someone that still wants to make passive income and have it increase every single year. My monthly dividend position will be Main Street Capital, which has grown almost 30% since February. It has a 7.55% dividend yield, which I know is higher than Vici Properties, but Vici doesn't pay every single month, so this is why this is the monthly dividend one. It also has a low dividend CAGR, but that seems to be the theme with a lot of REITs and BDCs, or real estate investment trusts and business development companies, who contribute a lot of their cash flow to their shareholders. And with this position, the dividend CAGR and the share price is a little mistaken, I guess, because with Main Street Capital, it's one of the dividend companies out there that happens to pay a special dividend. This one has paid a quarterly special dividend every quarter since, I believe, July 2023. And then when it comes to diversity, nothing's changed. I'll probably still go with VTI, which has grown about 27% since February. So this is obviously not the perfect top 5. This is just based off what I've learned over the past almost year or so. So I'm sure a lot of you guys out there have better picks. So make sure you leave comments below on what would your top 5 be if you had to narrow down your portfolio to those 5, and have that be a portfolio that you just trust your large amount of money to go into, reinvest into itself, and kind of set and forget. But in regards to my situation, I might do this little experiment again where I take my simulated portfolio on Investopedia and I sell all those positions and do a hard reset and buy back into these 5 positions, and it may be the next 6 months and then the next year, I'll look at it and compare it to my portfolio and kind of see how it's doing. And I get it's flawed because my portfolio also includes a bunch of other positions, and I do buys and I do sells into that position. But again, it gives me an idea of how I'm growing as an investor. and it may be something you want to try out as well. But this year has been really fun investing so far, even being a small investor. And I actually made a video pretty recently about how it's been investing $30 every single week for the past year and how my portfolio has been impacted and growing, the positions I've invested into the most, the dividends I've made, how much it's grown despite investing a low amount. So hopefully you guys have time to check out that video. I appreciate you guys watching this video. Hopefully you enjoyed it. And until next time, as always, take care.